Hi there, everyone, and welcome into today's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so as usual, let's start off with the XJO. Our market lifted, tried to jump back near that 75 support slash resistance level. So come out, you can see pretty important level for our market. We cracked below that on Friday. Now we've come back to test as resistance, but failed to see a little sell-off. That's looking pretty bearish to me in the short term here, obeying that downtrend line, but coming into an overall pennant, right? So we're probably more short to medium term bearish, back into around 73.50, 7300 as we squeeze towards the edge of that pennant pattern. Obviously, it could break out before that. We'll see if that's possible or not. Well, there's a few key pieces of information coming for us in the next day or two, so that might see a break. But nonetheless, technically, and I'll talk to the fundamentals at the moment, technically, to me, that looks like it's coming back in towards 7,300. A little bit oversold already, but really, when you have a look at this pattern, it kind of makes sense for it to come back in around 73.50 to me. Okay, if it really wants to obey a nicer looking trend, not this huge rally we saw through Jan, just a nicer angled trend. A pullback is healthy here. Okay, is the way I like to see it. If it keeps rallying through to the all-time high, it won't last, guys. Okay, if it rallies from here and just pushes up through the all-time high, it probably won't last. It'll come pulling back down pretty quickly. Whereas if it comes back into that longer-term trend there and keeps obeying that trend, that means we might be setting into a longer trend. Now, S&P 500 last night surprised me, to be honest. Right, held strength, closed at its highs. Sitting also inside a bit of a pennant pattern, though. Okay, a little bit of a pullback through here at the moment from 4,200. What I like about this chart is it's broken the longer term downtrend. Now got higher peaks, higher troughs, so we confirm the uptrend. And what we want to do now is just keep reconfirming uptrends. Okay, you got an acceleration off this trend here. This line's really not confirmed. I much prefer to see a third touch point to reconfirm this line. And what we're trying to do in the short term here is trying to see whether we're going to break and come back down towards that, or whether we're actually going to hold and continue this acceleration. Okay. Now tonight we'll find out, right? We've got CPI being announced. Okay. At 12:30 our time. Okay. About an hour before the US market actually opens, and we'll be able to react to that ourselves in the Aussie market tomorrow morning. So look, technicals at this stage to me are screaming bullish, right? But with big news like CPI out, especially how much the market's focused on interest rates at the moment, that's really key right now. All right. So what we're looking at the moment locally, Aussie reporting's kicking off. Probably a few things locally. Actually, I should have put an RBA slide up. Interest rates and reporting, right? That's the two main focus points for our market over the next few weeks. CBA is reporting tomorrow. I think that's key for us. That's going to really dictate the top big four banks and where they're going to move over the next few weeks. CBA is looking a bit overdone though. It's rallied into an all-time high. Typically, it rallies into Feb, pulls back after it's reporting at some point, whether it be the dividend or whether it's the report itself that triggers the selling. I'd probably say the banks will go to come back into March at some point, but whether it rallies over the next week on the back of a good report or bad report, we'll find that out tomorrow as well. So CBA reporting tomorrow, that's big for the banks. Okay, you got to remember the banks are a big portion of the XJO. So if you are trading the index, this is important to you, right? Then you got BHP next week, which kicks off the miners and where they're going to move. So those events are very, very important if you're trading the index, guys. Okay, a big portion of the top 10 are miners and banks, right? And that's big portion of the actual index itself. The Aussie reporting, very, very important, guys. Most of the reporting I've seen so far has actually been a pretty big fall, right? Ansell, James Hardy, just to name a couple there, fell quite a bit. AZJ, big fall there. CSL surprisingly came up a bit today after its report yesterday. But the majority of what I've seen is actually, a bit of the initial sort of negative pullback, right? So let's see if that continues. I suspect the banks will be a good report. Okay, CBA's net interest margins should do well in this environment. Obviously their front book won't be getting a lot of attention right now. There's a lot of nervousness out there, but back book, net interest margins, they should do well out of that side of the business. Where they'll see the pain, I think, is another sort of 6 to 12 months time, right? Where you might see some bad debts come up and things like that on the back of the higher interest rates, but it's going to take time to flow through. Okay. Have rates topped, right? That's what the markets care about right now. We've seen a bit of a pullback over the last week. Okay. We've seen bond yields climb, so selling in the bond market. Yields are going up, indicating rates are going to go a bit higher. Still, compared to where people were believing rates were going to go last year, that caused a bit of a small sell-off so far. But yeah, look, that's what's going to tip markets back and forth this year. If you get this high sort of feeling that rates are going to hike on the back of higher inflation or really good economic data, then the market's going to fall. If the markets think that economic data is weakening but not getting too weak, and rates are topped, well, markets they're going to go up, right? It's as simple as that. The biggest tipping point this week is the CPI. We've got retail sales later in the week and a few other bits of US data, but the CPI is key here. If CPI comes in as expected or lower, okay, then you'll see the markets rally pretty hard, actually. But if CPI actually starts coming up and they start revising up, markets aren't going to like that. So these readings are very important to me as a trader, as an investor, and whether I'm fully invested or partly invested, or whether I'm trading bullish or bearish, it really comes down to readings like this at the moment. Okay, we've got to stay nimble this year, guys. Right, it's not a clear path forward. Coming out of COVID, there was a clear path. It was clear, right? Stimulate, stimulate, stimulate. Throw money at the economy. Let's get the economy moving again because we're all in lockdown. Okay, they needed to keep businesses going. They're splashing cash everywhere. Now it's the opposite. We're tightening. Okay, and we're tightening, but how tight are they going to go to bring inflation down? That's unclear, right? We're in unclear territory. So we've got to stay nimble on our view. Lean on your technicals and just be wary of these types of announcements, because that's where you can start seeing this big switch back on those views. Okay, bond market's important. You should be watching that. I'd like to look at the US and Aussie 10-year. If that's climbing quickly, then I suspect the pullback's coming. If it's falling quickly, I suspect the markets will probably rally. Right, that's where I'm at on that at the moment. Otherwise, guys, well, there's probably not too much more to say. US reporting season is probably a bit weaker than normal. Right, their average is usually 80 odd percent. Beat expectations. This time it's hovering around the 70% mark. So it's weak as reporting seasons go. Probably no more weaker than what we saw last year, though. The question is whether these stocks are priced this stuff in. Go look at Microsoft and Google, and well, Google's a bad example because it fell a lot off the back of their AI announcement last week. But look at some of these really good stocks like Microsoft that have been absolutely hammered in the last couple of years, right? You can't tell me that's not priced in at this point. So a lot of that growth stock space, yes, it might be a bit volatile this year. It's got to be getting pretty close to bottoming out, one would think, especially if you think interest rates are topping out. Okay, so just food for thought, guys. You should be looking at that growth space carefully in the coming months, coming 6 months, coming weeks. I'm already starting to play in that space now, right? And happy to pull out if I start seeing any sign of inflation going back up. I will be pulling out of that space again, right? But for the moment, there's trends forming. Okay, early on trends as well, so that you should be looking to play that space, but know the triggers. Okay, and have your triggers to go in harder or get out. Right, that's what you should be looking at right now. Anyway, that's enough from me. Thanks for listening in this week. Take care and bye for now.